Welcome. September 17th, FOMC live stream. Data release here in about 12 minutes. Been trying to decide if I wanted to do the Iron Condor. It's about 135 wide. Looking at the $4 strikes, which is pretty juiced compared to what I thought it would be. But that also means they are definitely pumping in some juice for uncertainty. Question is, are the options overpriced or underpriced? Typically, the more juice they are, the more overpriced they are, but never know. We don't know what Jerome's about to do. I think I will do a 2-lot. That's kind of what I've been thinking. Personally, I'm not going to use a stop. I'm just going to manage it here between now and when the press conference starts. But make sure you understand the risk and do what fits your risk tolerance. I took one day trade today in SPX, and that was right after we bottomed. I got calls after we made that dip and then dipped again and couldn't push any lower. So right here in this consolidation, I bought calls and just got out of them right at previous day low. So that was good for 540. And then the only other thing I've done today is the creams, which I'm going to close out here shortly. But the first one I did 5 tranches, took 2 of them off for a nice profit. And then the remaining 3 are down about, oops. I don't know what that little hover thing is, but down about 1,500 on that one. And then I added another one, and that's down about 5% as well. So I'll close those out here shortly. So down about 2K on the creams. Started getting a little bounce coming in a lot of things. Here's the Mag 7. NVIDIA finally bottomed, at least for now. Big bounce. A lot of the chips started bouncing, which had been the weakest. Big bounce in ARM, SMCI, SMH, the semiconductor ETF. A little bounce in PLTR. The banks were strong early, and then they kind of sold off a little bit back to mid-range, and they've just been kind of chopping sideways. So we'll see what the old FOMC has to bring. So we've got the data release here in about 9 minutes. So I am going to go ahead and close my creams. Unfortunately, if anyone took the $3 profit target, those hit for most people I saw this morning, but I have mine set at 10%. Took part off at about 6 or 7% this morning, but never quite got to the 10 for the rest of it, and then never came back into the green after that. It just kind of bled out. All right, so those are closed. Get those posted. So it looks like the $4 strikes right now are on the 66.65 calls and the 65.20 puts. With 60 wide would put that trading at about $6.60. VIX finally took a little dip and from about 16.7 down to 16.4, bouncing back up now. Got about 6 minutes. Let's see if Jay Powell is wearing his purple tie today. I'm going to go ahead and enter here. All right, I got filled on the 65.20 puts and the 66.70 calls for a 580 credit. $60 wide. Pre-data, we've got gold just under all-time highs that it hit yesterday. Same with silver. 10-year yield is currently at 4.047. And the S&P is at 66.60, just under all-time highs from yesterday of 66.96. That's on the ES futures. According to the CME FedWatch tool, 95.8% chance of a 25 basis point cut. 4.2% chance of a 50 basis point cut. And a 0% chance that we don't do anything. All right, S&P, a little bounce coming into the release in about 40 seconds. Banks are bouncing. Apple's bouncing. Yep, I closed it. It's in the trade channel. Chips are bouncing. Here we go. Big boy bounce. S&P through pre-market highs, through highs of day. Russell really bouncing. NASDAQ bouncing, not quite back up to highs of day. It's just at yesterday's low. Cut is 1/4 point. Iron Condor a little off center, but not too bad. So 2 more rate cuts this year, potentially, is kind of the projection, it sounds like. A little bounce getting sold off. Iron Condor is already up 19%. Iron Condor up 29%. Some quick decay coming out. Those things were juiced. Let's take a little trip down memory lane and see what the old crean would look like. I bet it's looking good right now. No, it would still be red. Definitely recovered a little bit, but here's what mine would look like. Basically back to break even. Which means the juice is coming out of the 2-day options as fast as it's coming out of the 0-day. Right around 6,600 in SPX would be the ideal spot, but now we're up to 6625. VIX dropped back below 16. So gold went from red to green a little bit. Almost, about unchanged. Silver still down about 1%, but bouncing. 10-year yield dropping. Almost down to 4 even. Iron Condor, even with this 25-point move, is still up 25%. I mean, if this thing can come back to about 6,600 in a somewhat orderly manner, might be able to book close to 50% on this thing. No, I just did 2 lots. I'm just going to hold for now. It's at 30% right now. We've had a quick little up move, so let's see if we get a little. Here comes a little pullback. $37%. Let's go. I should have done 50 contracts, Moel. Why didn't you tell me? Just wait till the bots take over, Moel. Then you're really not going to be able to stop the bots. Brave move, Tony. Brave move. Hope you get it. I mean, if you're still holding, you might as well just keep holding. See if you can book some real profit. Iron Condor's at 40%. Still have 22 minutes till the presser. Nice premium suckage. S&P pulling back to previous highs of day. NASDAQ coming back down about mid-range on the day. Russell still staying fairly strong. VIX still hanging around just below 16. So Hood popped up to highs a day. It's selling off. Banks are moving higher. Well, except for JP Morgan. It's pulling back. Coinbase MSTR popped. They're pulling back. CoreWeave as well. As far as the big boys, Tesla popped, gave it all back. Nvidia was moving up kind of pre-release. It's now coming back down. Meta is through lows. Yikes. Meta is not liking the Fed decision for some reason. Microsoft back in the red. So Nvidia's coming down hard. Let's see what the other chips are doing. Yeah, SMH had a big run, almost went green, and then big reversal. MU went green, big reversal. Yeah, a lot of big drops in the chips. We like to call those chip dips. Iron Condor's at 45%. Yeah, gold going green, silver still bouncing. 10-year yield is now below 4. So the markets, or the interest rates, kind of like the idea of a couple more cuts this year, looks like, as far as going lower. All right, I'm going to close one of my Iron Condors. Closed one of two. Over 45%. Filled at 315 to close one. In at 580, out at 315 in 12 minutes. Reversals still incoming. NASDAQ's almost back to lows of day. Look out below, says the NASDAQ. Woo! PLTR. Ooh, man, chips are getting hammered. Hammer time. MU through lows, all the chips through lows. NVIDIA down 2 lows almost. Tesla, big drop. Let's get dirty. I mean, if we're going to do it, let's just get downright dirty. Still have one left. It's at about 43%. If we get a little bounce, get some more premium sucked out, but it's a big if, looks like. S&P ticked through lows of day. NASDAQ, there's no ticking in that one. That one is flushing. Yeah, VIX back in the green. It is not back up to highs of day, though. It's only kind of mid-range for the day, which is interesting. It is not reacting as heavily as I would have expected with this drop. Ooh, baby. Getting down and dirty. Man, there's still going to be so much juice in these strangles. I'll have to see if I want to do one. Maybe I'll try to scalp some Elmos. Scalp some no-stop iron Condors. Or maybe just directionally trade here. Netflix is staying pretty strong. Baidu's still up 7.5%. All kind of the same stocks from this morning are still up. The Chinese stocks. Uber's down the most, followed by AVGO, OKLO, PLTR, Coin, Oracle, NVIDIA. Caterpillar's up 2%. Bitcoin flushed through lows, but it's bouncing back up to that level. S&P trying to bounce. Iron Condor still up about 41%. Not a huge contraction on that little bounce. Well, the markets were just, or the options were just so overly juiced that I think it's going to be hard for that long strangle to make a move big enough to profit. But that's kind of my initial thought around it. Got about 10 minutes till the presser. Yeah, that's what I was saying. I almost, if I see a little pocket, might do some little premium selling instead, but may not do that either. We've had a couple big moves already. If this thing starts to settle down, I mean, I think the premiums will really come out. $4 strikes are still 66.40, 65.30, still 110 wide. Elliot, you can't hear my voice? Everybody else hear me okay? Lando, can you show Elliot where to check his audio? Still around 44%. Approaching 50%. This is probably the quickest decay I've seen. Pretty close to it. I can't remember what the highest percentage of decay before the presser has been. This is right up there, though. I am right back to center. We are right back to where we started. So much of a move in either direction could take away. So I'm going to go ahead and close my remaining. Filled at 290. Nice, Tony. I think if you just go to YouTube, Moel, it'll pop up. I'm just watching on my TV in the background. Big bounce in the chips, bringing the market back up. VIX back down to around 16. All right, so we've already had 3 moves here. Big up, big down, big back up. I don't know that I'm going to do that 30 delta strangle. These premiums are still so juiced, and they're going to, this thing settles us down. They're going to decay quickly. I think I'd rather sell some premium in this. Be More Trader, can you just let me know which one? I need to know if it's going to be the upper or the lower. looking like it wants to go retest the upper now. It's already halfway back, halfway home. Just needed to shake out the all the stops above and below the pre-market levels. Now comes the real move. Banks are already back up towards highs of day. Chips basically look like the market. S&P just went green. Yeah, Russell never even got close to lows of day on that flush, and it's bouncing almost back up to highs. So small caps definitely stronger. Russell's up 2%, while the S&P and the NASDAQ are red or unchanged. $4 strike still a hundy wide. Here's Jerome, purple tie, baby. The dark purple. He loves the purple ties. I mean, he rarely gets away from that purple tie, so the probabilities on that one have got to be the highest. Well, it's already known now, but yeah, it's greater than 99% chance. That's because he already started. I wonder what it was before. Discount, did you see what the probabilities on a purple tie were before? Now we're coming back down a little bit. Now this is some FOMC action. And back down almost to lows in the S&P. As soon as Jerome's opened his mouth. Elliot, did you get your audio working? Okay, got you, Lando. Just listening to the man in the background here. Boy, Jerome looks like he's aged since the last meeting. He's got a few more wrinkles going on. Hair's a little grayer. Looks like he hasn't slept much. Poor Jerome. Hey, here comes another little bounce. I don't think he has slept since the last meeting. Now the Russell's coming down to about where we started. Now for the questions. I don't think I'm going to do it. These premiums are too juiced, Elliot. I was thinking about selling some premium if we get a little I mean, we've already had several big moves now. So we can get a little pockets of 10 to 15 minutes of inactivity, small range. Premiums are just going to get sucked out. Cut him a quarter point as expected, E. Allison. Yeah, I'm gonna dabble in a little no stop one lotter here. Well, let's see if we go through lows first. I just want to watch it. VIX back above 16. VIX not pushing highs of day though, as S&P's coming to lows. Still just kind of mid-range, unchanged on the day. There's lows of day. All right, I'm going to sell one here. I'm doing my 3.5, 2.5, 30 wide, no stop. Filled on the 35 calls, 66 35 calls, and 20 put, and 65 20 puts, so 115 wide. Those longs are expensive though, only 30 wide. Little bounce off the lows. Let's see if Trump Daddy's posting on Truth Social yet. No, nothing yet. Yeah, Donna, when I said that, I was speaking specifically about directional trading. You just got such a big range of price swings. That's ideal for directional trading. When things are little choppy and sloppy and whippy, that's kind of hard to trade directionally, but the bigger the range, the better.
it's just one of the things that suggests that the labor market is really cooling off. And that tells you that it's time to take that into account in our policy.
The SEP, once again, the median participant has inflation higher than previously expected.
Up about 11% on that iron condor I just sold.
Going back to the 2% target in 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts at this point.
Yeah, so I would look at it this way. We fully understand and appreciate that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to these goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth is slower. So I would just say that the risks there have been less than one might think. In terms of the labor market, what we're seeing is unemployment is still low.
Yeah, I mean, that was a 20-point move almost. This 5-minute candle was a 20-point move from top to bottom, and it still sucked out 13% of the premium on that iron condor. So I don't think buying premium is going to be the ticket today.
Cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address,
I mean, not to say that we couldn't have a quick 50-point move. We certainly could, but
then inflation, which has remained
I don't think I'm going to play that game.
above your target. I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering.
Dave S., are you on here?
Say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing.
No, it doesn't look like it. Wonder if he did his. Oh, you are.
Perhaps more than that.
Did you do your back ratio?
And we know that because the unemployment rate has ticked up. So, that's what I meant by that. Follow up. Every year since 2015, the SEP has forecast that you would hit your target 2 years later. And this year,
Yeah, it's kind of in that down
you're going to hit your target
50 points, right? Which is
2%.
was the what you don't want now.
Is that
Still a little ways to go between now and Friday, but
really achievable? And does this present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
S&P pushing new lows. NASDAQ new lows. Now the Russell's joining in.
That's literally how you
Now the Russell's through lows of day.
writing down a rate path, which is designed to create
Small caps are jumping on board with the bear train.
2% inflation and maximum employment too. So that's all
Nvidia through lows. Microsoft,
where they'll become.
Amazon, Apple all through lows.
The exercise is to break down policy that you believe would return to the 2% goal
Most of the chip stocks, 2 are at lows.
exercise.
2 are through.
Thanks so much, Linda Schulte with ABC News. The latest inflation report shows that prices are still
Even with that continuation lower, still up 8% on this iron condor.
What will the Fed do if prices pick up more?
So our expectation
Any kind of little bounce will just suck it out.
has been that inflation will move up this year, but that basically because of the effects of the goods price,
Market's pissed. We didn't get 50 basis points.
those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume that, though, right?
This is what the old crean would look like
Literally to make
had it been held.
sure that we will
Not good.
right now.
Not good. Hopefully nobody held that.
We see inflation, we continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass-through of the tariffs into inflation has been slower and smaller. The labor market has softened. So the case for there being a persistent inflation outbreak is less. And so that's why we think it's time for us
And with that little bounce, the iron condor is up 27%.
grown, and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates, and we try to balance them. For a long time, our framework says that when our two goals how do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal. So, and then that's, we think about those things and we see, as I mentioned,
I don't. Yeah, I don't know. I don't know. I don't have a sense of direction here yet. I'm not interested in putting on any directional plays.
Concerned are you about the slowdown in the job market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better.
35%.
You see people who are sort of more at the margins, so kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low
Right back to center. All right, I'm going to close this one out and
concern is that
see if I can scalp another here after we potentially move again.
a lot of hiring going on, so that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern.
In at 385, out at
And it's one of the reasons why
260.
that we begin to shift our policy focus toward a more balanced one.
Steve Litzman, CNBC. Mr. Chair, in the past, during rate catching,
Dick K, you multi-tranching like a madman?
and I wonder if you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that is sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting that? Thank you.
So I think we're in a meeting by
God, I want to sell some put spreads, but
let me say a word about the
I don't know if we're done going down here.
We often point this out. The S&P is
I mean, the VIX hasn't even gotten back up to highs of day.
accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual
Little bounce, getting pushed back down.
involving outlook and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking
If we get a nice, real, scary flush, I'll consider some. I just don't have a level to manage any risk around here
lens of probability,
that I like.
there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question. Is the dispersion in the outlook a sign of uncertainty of policy
I mean, I guess I could use kind of the top of this range, which would be at about 65,
The labor market is weak, inflation is low, and
40-ish on SPX.
that's when you gotta be careful about inflation. So we have a situation where we have two-sided risk, and that means
I want to see a nasty flush with volume.
difficult situation for policymakers, and it's not at all surprising to me that you have a range of views. It's not so much
Here we go, new lows.
views for the path of the economy, but it's partly that, but it's also partly about what's the right thing to do in light of this, of the tension between the two goals. How do you weight them? How worried are you about one versus the other? It's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based on, in this kind of highly unusual situation, and we do. So, but, we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right.
Just hit the lower expected move in SPX.
I think that's understandable and natural.
I had it marked at 65.57. We're now down to 54.
You've talked a lot about Fed independence and the importance
A lot of stocks going through lows.
Look, it's deeply in our culture to do our work based on the incoming data and never get
Apple just went red. Amazon through lows.
feel strongly about that way. So, you know, you'll know it by the way we talk about what we're doing, by the speeches.
I'm just going to let this go a little bit.
You'll know that we're just still going to do that. That's all we're doing. And we don't frame these questions at all. We see them in terms of political outcomes. Like, when you get to another part of Washington, everything is seen through the lens of does it help or hurt this political party, this politician. You know, that's the framework. And I think people find it hard to believe that that is not at all the way we think about things. At the Fed, we're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have.
VIX is now at highs of day almost. A tick away.
We're having a really great discussion around these challenging issues. So,
See the forecast around use of the SBA related to questions of independence?
I see it as a court case that would be inappropriate for me to comment on.
Thanks, Mr. Chairman. Edward Lawrence.
All right, I'm going in with a vertical. Bullish vertical, long call vertical. See if we get a bounce off expected move here.
The revisions for June were the first negative revisions we've seen since December of 2020. How will the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you call it, capacity building?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was.
So here's what I did. I did a 65.80 long call spread. Starting to bounce.
Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with the low response rates, but it's also got to do with what's called the birth death model. Because a good amount of job creation happens around new companies, and how many go out of business, how many are founded. And it's just really hard. You can't survey for that. You've got to have a model that predicts that. It's quite difficult to do, especially when the economy is undergoing big changes. So I think they've been working on all of that.
Nice bounce.
The data we get
The vertical's up 29, 30% already.
for us to do our work. To the extent we have any user data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have less follow-up data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month.
VIX back in the red.
And you get to the place where the big data are much more reliable by the second, certainly the third month. So it's not that we don't get the data, it's just that we get it a little later.
For benchmarks, if that holds to 61% of the jobs that we thought were there weren't really there, shows a weaker job market coming into this year. If you had had that information, would it have changed your mind related to where the interest rates should be?
We have to live life looking through the windshield rather than the rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action, and we took that appropriate action today.
Thanks, Howard Schneider, Reporters. So, as you mentioned a minute ago, some markets
Things up almost 50% already.
happening. Black unemployment rate in August was +7%.
I'm going to go ahead and take 2 of my 3 off here.
College graduates fighting for high rising youth unemployment. Why do you think a quarter percentage point down is going to arrest them?
Well, I have to say that I thought a quarter point would make a huge difference.
In at 570 out at 875.
Right? And markets has already been baking in.
Beautiful bounce.
Market works through expectations, right? So I think our policy path really does matter. And I think it's important that we use our tools to support the labor market. When we do going up, you see number of people who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation, that shows you that at the margin, the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all those together, and we see that the labor market is softening, and we don't need it to soften anymore. We don't want it to. So we use our tools, and it starts with a 25 basis point rate cut, but the market's also pricing in a rate path. I'm not blessing what the market's doing at all. It's not just
$4 strikes. Oops, wrong cycle.
The growth mix right now seems very concentrated in investment and on the consumer spending side in the hiring.
$4 strikes, 15 and 50. So still 65 wide on a $4 strike.
those are two. We're getting unusually large amounts of economic activity through the AI build out and corporate investment. I don't know how long that will go on. No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations, and that may well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, the spending.
Well, is the bottom in? Because VIX just went through lows of day.
It's moving along. Economic growth is going to be 1.5% or better this year, maybe a little better. Forecasts have been coming up, as you can see. So, labor market unemployment is low, but downside risks, but it's still low unemployment rate. So that's how we see it.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat. He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
Of course, I'm not going to comment on anything the Secretary says or really any other officer says. So in terms of reform at the Fed, we just went through a lengthy and I think very successful process of updating our monetary policy framework. I would say there's a lot of work going on behind the scenes around the assets we have in the Federal Reserve system and at the board. Are they the right size? We're actually going through a 10% headcount reduction through the whole Fed, including the board and the Reserve Bank.
Nice bounce. Back up to yesterday's lows.
Basically at the same level it was more than 10 years ago. So we will have had zero job growth for more than a decade when we're finished with that. And I think we'll probably do more than that. So I think we're certainly open to constructive criticism and ways to do our jobs better.
Not an independent review?
We're certainly open to always trying to do better.
Mr. Chairman, Neil Irwin with Axios. There's been some debate lately on whether AI is already starting to affect the labor market in terms of lower labor demand, higher productivity by contrast. Do you buy that? And if that is true, does that have implications for monetary policy setting?
So there's great uncertainty around that. I think
Verticals up 64%.
a bit of a guess, but widely shared, I think, is that you are seeing some effects, but it's not the main thing driving it. And so a particular focus on young people coming out of college, and yeah, there may be something there. It may be that companies or other institutions that have been hiring younger people right out of college are able to use AI now more than they have in the past. That may be part of the story. It's also part of the story, though, that job creation more broadly has slowed down. The economy has slowed down. And so probably not
Just had my level and managed risk around that level, Moel.
Thanks, Mr. Chairman. What evidence do you see tariffs showing up in inflation?
So let's see. Market's open for another hour. I think he's usually It just depends on when questions get over, but I think he's probably done in the next 20 or 30 minutes.
What the typical thing was that goods inflation was the goods prices generally went down even adjusting for quality. So that was not the case during the pandemic. Of course, goods inflation was very high. We didn't see any return to zero or slightly negative inflation. Now, goods inflation was
Right back to where we, almost back to where we started.
doesn't sound like a lot, but it's a big change. So we think, I mean, Canada said they're using
Hood is pushing up towards highs of day. Banks, big bounce.
something like that to the current core PCE inflation.
Chips, big bounce.
So it's contributing. Um, what seems to be happening is that the tariffs are not mostly not being paid by exporters, mostly being paid by really.
Tesla back in the green. Microsoft back in the green. Apple back in the green.
So if you buy something and you sell through retail or you use it to make product, you're probably taking a lot of those costs on and not
I'm going to sell some more premium here.
consuming. That's a
Prefer to do it on a fall spike, but
all of those companies and entities in the middle, they'll tell you that they have every intention of passing that.
I'm going to do it here. My same no stop iron Condor, 3.5, 2.5 strikes, 30 wide.
It's been pretty small. It's been slower and smaller than we thought. But the evidence is very clear that there's some pass-through.
I also wanted to ask if you could share with us the conditions under which you might consider leaving the Fed in May.
I have nothing new on that for you today.
Hi, Katarina Ferraro.
So 70 wide.
I just wanted to follow up.
$3.5 puts, $2.5 calls, 70 wide.
I've often heard you talk about how you and your colleagues
It's on my screen.
do not think about politics. This does not enter the room. But one of your new colleagues does come from this world, right, where everything is seen through this framework of politics and of what party is being helped, and that person is still employed by the White House. How can markets and the public interpret, some of his speeches, for example, and then some of, the forecasts that we see today? I mean, the median for this year was moved because of the introduction of his forecast. I'm talking about the number of rate cuts seen this year. What do you say to markets and the public that are trying to interpret, what you guys are saying?
So there's 12 voters, 19 participants of whom 12 vote, as you know, on a rotating basis. So no one voter, can really, the only way for any voter to really move things around is to be incredibly persuasive. And the only way to do that in the context in which we work is to make really strong arguments based on the data and one's understanding of the economy. That's really all that matters. And that's how it's going to work. And I think that is the way.
It's already up 13%. Love it.
That's not going to change.
And then I wanted to ask about a Gallup poll that showed that Americans not only want something like presidents
I just thought we got back in this mix where we've been trading all day. Thought we might like to chop again was kind of the thought process behind entering here.
Our response is we're going to do everything we can to use our tools to achieve the goals that Congress has given us, and we're not going to get distracted by anything. So I think that's what we're going to do. We're just going to keep doing our job.
Claire Jones, Financial Times. Given the range of views expressed prior to the meeting, I think there was a lot less dissent today than a lot of people expected. It'd be good to know just what you think the drivers were of coming to that very strong consensus in the meeting.
Vertical now up 71%.
Why the plots are really so scattered between someone even expecting rates to end up higher by the end of the year to 5 cuts. I mean, what were the kind of range of views you had about, on one side, why there was so much support for a cut today, and on the flip side, why there's so much divergence about what comes next?
So I think there's quite a wide assessment that the situation has changed with respect to the labor market. still say, and did say in July, at the time of the July meeting, that the labor market was in solid condition, and we could point to 150,000 jobs per month and many other things. I think that the new data that we've had, and it's not just payrolls, it's other things as well, suggests that there really is meaningful downside risk. I said there was downside risk then, but I think that
Up 23%.
and there's clearly more downside risk. So I think that's broadly accepted, and so that meant different things for different people. Everyone wrote down supported this cut, and some supported more cuts and some didn't, as you will see from the dot plot. So that's just the way it is. I mean, people have
S&P tried to go green, getting pushed back down a little bit.
think about it all the time, do their work, discuss it with our colleagues. You know, we endlessly discuss this between ourselves, and then we have a meeting where we put it all out on the table, and this is what you get. And you're right, there's a range of views in the dots.
Big bounce in Bitcoin.
Like I said, very unsurprising.
VIX dipped back down to yesterday's lows, 15.45.
Nature of the challenges that we face. Let's remember though, the unemployment rate's 4.3%. The economy's growing at 1.5%. So it's not a bad economy or anything like that. We've seen much more challenging economic times, but from a policy standpoint, the standpoint of what we're trying to accomplish, it's challenging to know what to do. There are, as I mentioned earlier, there are no risk-free paths now. It's not incredibly obvious what to do. So we have to keep our eye on inflation. At the same time, we cannot ignore, we must keep our eye on maximum employment. Those are our two equal goals. And you will see that there are a range of views on what to do. Nonetheless, we came together today at the meeting and acted with a high degree of unity.
Bosch, you held? Wow.
The job creation is running below your guesstimates break-even rate. So I'd be curious to hear a bit more about that, where you think the break-even rate is.
All right, I'm up 31%. I'm going to go ahead and close this.
None of them is perfect, but you know it's clearly come way down. You could say it's somewhere between 0 and 50,000, and you'd be right or wrong. There's just many different ways to do it. So wherever it was, 150,000, 200,000 a few months ago,
In at 475, out at 335.
lower amount of people are joining the labor force.
27%.
Much at this point, and that's a lot of where the supply of labor was coming from over the last 2 or 3 years. So we're not getting that now. We've got much lower demand. And, you know, it's interesting that supply and demand have really come down together so far, except now we do have unemployment.
Oh, yeah, nice vertical.
Outside, just one tick outside of
I'm still holding one.
range where it's been for a year. 4.3% is still a low level.
The VIX is acting makes me think the bottom's in, so I may just hold this last one to expire.
You mentioned the downside risk to employment a fair amount, but it's striking the measures of kind of activity and output for the third quarter, those that we have, see pretty strong. The Atlanta Fed's GDP now is very strong. You mentioned strong PC numbers as well. How do you square those things? Is there a chance actually the upside risk to the labor market if those activity measures are right?
Well, that would be great. We'd love that to happen. So I don't know that you see a big tension there, but it's gratifying to see that economic activity is holding in, and it's good. So it's a good bit from consumption. You know, it looks like consumption was stronger than expected than what we got earlier this week.
Indices seen a little bit of a pullback.
Sector is producing a lot of economic activity, which
NASDAQ bounced all the way back up, almost to highs of day.
business investment. So
Now the Russell price action weaker, even though it's still up the most from yesterday's close.
for this year actually moved up in the S&P between June and September. S&P, so and
Banks starting to pull back.
didn't change much. It's really the risks that we're seeing to the labor market that
Chips starting to pull back. Yeah, everything's kind of doing what the indices are doing here.
Hi, Nicole impact of high interest rates on the housing sector. I'm wondering how concerned you are that current rate levels are exacerbating housing affordability.
Yeah, the long strangle would be getting destroyed left and right here
Accumulation for a segment of the population.
so far.
You know, housing is a,
Still have 46 minutes to go.
so it's at the very center of monetary policy. When the pandemic hit and we cut rates to zero, the housing companies were incredibly grateful, and it was really, they said that was the only thing that kept them going, was that we cut so aggressively and provided credit and things like that. They were able to finance because we did that. The other side of that is when inflation gets high and we raise rates, and you're right, it does burden the housing industry, and so rates have come down a bit, and as that happens, we don't set mortgage rates, but our policy rate changes do tend to affect mortgage rates, and that has been happening, and that'll of course raise demand. Lower borrowing rates for builders will help, get builders will help supply, and so some of that should happen. I think most analysts think that you have pretty big changes for it to matter a lot, for the big changes in rates for to matter a lot for the housing sector. And the other thing is by achieving maximum employment and price stability, that's a strong economy. That's a good.
S&P and NASDAQ both are at pre-market lows.
Last thing I'll say is, if there's a deeper problem here, there's not a cyclical problem that the Fed can address, and that just is a pretty much nationwide housing shortage. Or a lot of places in the country just don't have enough housing for people, and all of the areas around metropolitan areas like Washington, for example, are very built up, and so you're having to build farther and farther out, and so that's where it is.
And just a quick follow-up, during the last S&P, or the press conference following the last S&P, you seemed to indicate that policymakers lacked conviction about their projections. I'm wondering if you still feel that way.
Forecasting is very difficult even in placid times, and as I've mentioned before, forecasters.
Jerome just said flaccid.
Humble about. So I think right now is a particularly challenging time, even more uncertain than usual, and so I don't know any forecaster anywhere really. Ask any of the forecasters whether they have great confidence in their forecast right now. I think they'll honestly say no.
Netflix is trading near highs of day. It's still up 2%.
If you're cutting rates, why continue to reduce the size of your balance sheet than pause the unwinding?
Well, I think we're.
I foreshadowed the flaccidity to you, Moel.
We're still in funded reserves condition, and we've said that we would stop somewhat above an ample reserves level. That's what we are, and we're getting closer to that. We're monitoring it very carefully. We don't think that has at all significant macroeconomic effects. These are pretty small numbers.
Whew, that's a little dicey, you crane holders.
The level of runoff,
But good for you.
so I wouldn't attribute macroeconomic consequences to that at this point.
And at his recent confirmation hearing, Stephen Myron brought up that the Fed actually has 3 mandates from Congress, not just jobs and stable prices, but also moderate long-term interest rates. So what does Congress mean by moderate long-term interest rates? How should we understand that when we see the 10-year Treasury moving? And how do you think about this part of the mandate when policy choices like rate cuts or balance sheet reductions affect the long end of the yield curve?
So we always think of it as the dual mandate, maximum employment and price stability for a long time, because we think moderate long-term interest rates are something that will result from
SPX
inflation
trying to go green again.
and maximum employment. So we haven't thought about that as for a very long time as a third mandate that requires independent action. So that's where that is. And there's no thought of, as far as I'm concerned, there's no thought of considering that, considering that we somehow incorporate that into something in a different way.
I might try to get long Tesla or Hood here. Both are kind of hovering just below highs of day, acting like they want to break out.
FICO credit scores are down this year
year by 2 points, the most since 2009 during the Great Recession. Delinquencies are high for car loans, personal loans, credit cards. How concerned, if at all, are you about the health of consumer financing? And do you expect today's cut will help?
So, we're aware of that. I think default rates have been kind of ticking up, and we do watch that. They're not at a level, I don't believe they're at a level where overall they're terribly concerning, but it is something that we watch. Lower rates should support economic activity. I don't know that one rate cut will have a visible effect on that, but over time, a strong economy with a strong labor market is what we're aiming for, and stable prices. So that should help.
This rate cut is coming at a time when the stock market is
Tesla, I'm going to buy some 430 calls.
Is there a risk that cutting rates could overheat?
Potentially here. Watching it.
We're tightly focused on our goals, right? And our goals are maximum employment and price stability. And so we take the actions that we take with an eye on those goals. Separately,
Yeah, it's just a day trade.
why we did what we did today. Separately, we monitor.
I'd like to see it come back down here.
And I would say it's a mixed picture, but households are in good shape, banks are in good shape. Overall, households are still in good shape in the aggregate, and I know that people at the lower end of the income spectrum are under pressure, obviously. But from a financial stability perspective, we monitor that picture. We don't have a view that there's a right or wrong level of asset prices for any particular financial asset, but we monitor the whole picture, really looking for structural vulnerabilities.
All right, 430 calls in Tesla getting in. Filled at 572. I'll add some more if it comes down to pre-market highs or the previous day close, but jumping in here at previous day high, see if we can make a push, another push through highs.
You mentioned at the short run they've gone up a little bit. I wonder if you can talk a bit about that. And then also at the long run, wondering, do you see evidence that the debate over Fed independence and the growing deficit is putting pressure on inflation expectations?
So, as you said, shorter-term inflation expectations have tended to respond to near-term inflation. So if inflation goes up, inflation expectations will predict that it takes just a little while to get back down. Fortunately, throughout this period, longer-term inflation expectations both break even in the markets, and almost all of the longer-term surveys, Michigan being a bit of
Put a profit target at 675 in Tesla to close some if it makes a push through highs of day.
running at levels that are consistent with 2% inflation over time. So we don't take that for granted. We actually assume that our actions have a real effect on that, and that we need to continually show and also discuss our commitment to 2% inflation. And so you'll hear us doing that.
My vertical is now up 75%,
As I mentioned,
77%.
because we have risks that are both affecting the labor market and inflation. Those are our two goals, and so we have to balance those two. When they're both at risk, we have to balance them, and that's really what we're trying to do. I don't. Your latter part of your question was about independence. I don't see market participants. I don't see that that's something they're factoring in right now in terms of setting interest rates. Thanks very much.
Jerome is off the mic. Sometimes this is when the real move happens, is after Jerome is done.
Chair Powell saying the balance of risks have shifted towards more weakening in the labor market. Let's talk about potential dissents today. We got one from newly appointed Fed
Netflix pushing new highs.
basis point cut. We're going to discuss that and more in just a bit. Let's take a look at stocks too as we enter the final stretch today. They are largely mixed. The Dow's been higher for most of the day. Nasdaq lower. It is the Russell that is outperforming today about 1% or so from an all-time high. Also important to look at rates. The curve steepening, a little volatile there as well. The long end has been the focus. The 10-year went briefly below 4%, but you see now has risen above that, and we'll get into that as well. It's good to welcome you Jeffrey Gundlach, the firm's founder, CEO, and CIO. It's good to have you, and thanks for having us. Welcome, Double I.
Tesla starting to push.
You'll be surprised. So 37 times we've done this in relation to the Fed, which is feels like a lot less than that because the way time goes, especially when we get older. Yeah, and we've had a lot to talk about, obviously, in that stretch. Yeah, it's all over the place. Yeah, give me your
S&P, NASDAQ approaching highs of day.
himself called a risk management cut as he suggests the risk.
Tesla kind of leading.
Yeah, I think the phrase of this press conference is challenging situation. And
Oh, very nice, Elliot. Rapid fire.
surprise the markets a little bit, but led to some of the reversal on those lower interest rates. The stock market was that what he said there was no support or very little support.
Profit target in Tesla's at 675, trading at 660. There it hit it, 675. Nice.
It sounds like that wasn't a consideration then. He also said, which he says pretty much every press conference, there's no predetermined path for interest rates. I thought Steve Weezer asked an interesting question about the recalibration disappeared. Frankly, he didn't say recalibration, but I think there was recalibration. And,
Go, Tesla, go, go. Chad, you still holding your Tesla swing? Just cracked a new high from a couple days ago. I'll close some more Tesla at $8. If it makes another pop. Need S&P through highs of day. Bitcoin's pushing back up. NASDAQ almost to highs. SMH is almost back to highs. MU just pushed through highs of day. I was trying to decide between Hood and Tesla. Looks like I picked the right horse this time. Hood's bouncing too. So we've still got 37 minutes until the bell. I mean, it's not going to be anywhere close yet. If you get filled on FOMC day, and as much premium was in these options, I don't even know if you'll get filled. But if you do, it'll be in the last probably minute or two. So I'll check a little bit later. PLTR almost up to highs of day. Tesla still coming. Need to eat a little lunch. I'll try not to chomp in you guys' ears. NASDAQ just ticked a new high of day. Tesla just kind of pausing, a little pullback. Verticals getting close to max profit. I guess about 80%. Yeah, I don't know if Mahomes will get filled today. Just way too much premium juiced into these options. I think we make a quick push up through highs of day in the S&P and then settle back in. It's my guess. Heavy on the guess. Tesla just kind of chopping here. Waiting for another push through highs. Look, got a little over 22 minutes. You don't want to let that expire, though, Abosh, because then you'll be just, your shorts will expire, and then you'll be left with a 1 DTE long strangle, unless that's your intent. Oh, gotcha. Well, if you're Matrix, if it's not 0 DTE options in SPX, you have 15 minutes after the bell to still trade those. 0 DTE expire right at the bell. So he'd be letting his 0-day expire, and then the 2-day option he would close right after the bell. Yep, exactly. Yep, just shook out the bulls, shook out the bears, right back to where we started. You can if they're not 0 DTE discount. Yeah, those would be fine, Matrix. All right, Tesla, I need one more push out of you. When is the trade close executed? I mean, it's executed right when you do it. No difference than if you did it during normal trading hours. Correct. Yep. Yeah, you just have 15 more minutes to trade, basically. If you use interactive brokers, you can actually trade SPX for a couple hours before the market opens, too. No, nothing to do with the time zone. It's just that interactive brokers allows it. I have not tried the Creen in IB, no. Trying to do a pre-market one. I know just from remembering what Morrow said, there's very specific spreads and a lot of ratios are impossible on interactive brokers. So you'd probably have to do it in two legs, do the call side and then do a call calendar and then do a put calendar. So if you did it that way, you could kind of piece it together, I would assume. Then you just got to kind of figure out where you're at total profit wise and kind of manually leg out again. I thought about setting up bots to do that so I get filled easier, but I didn't. I just figured I'd do it as a package so I kind of have a better feel for where I'm at P&L wise. Because you couldn't set automated profit targets, right? You'd have to manually close it out when you were kind of around where you wanted to. All right, Tesla creeping back up towards highs. Let's see if it can push through. I've got a profit targeted Tesla to take some more off at $8. Currently trading at $7.55. Ooh, nice, Chad. You weren't messing around selling premium. I just dabbled. Just dabbled with a little 1 lot, 3 lot here. $15 minutes till the bell. VIX is starting to creep back up. Even though the market's not moving. Is this little VIX pump preceding a move into the end of the day. We've got 14 minutes, 4 minutes till MOC. Russell and Dow are green. S&P and NASDAQ still a little bit red. Definitely some tight range since Jerome stopped talking. A lot of times that's where you see the real move, but not yet. Still have MOC in 2 minutes. I'm going to turn my volume on. I'm going to go ahead and get out of my Tesla. A little dip as I was trying to exit. All right, plus 1,098 on that little Tesla move.
One minute to go till we get the market on close imbalance.
The 05 butterfly. Wow. Well, it's kind of jumping around. Looks like maybe up to about $1.20, $1.50. I don't know. Looks like closer to $1.20, I'd say. Nice work, Elliot.
Ten seconds. Market on close imbalance S&P 500, buy side 806 million, Nasdaq 100, buy side 460 million, Dow 30, sell side 17 million, Mag 7, buy side 169 million.
Small buy side.
Voice news disconnected.
I'm going to take my vertical to my last contract of this vertical to the bell. So with my day trades, my vertical, my FOMC iron condor, couple little no stop iron condors. Made up for my green loss this morning plus some. No BICs today. So nothing crazy, but green on the day. The 6600 butterfly still staying pretty cheap. Looks like around $1.20. Seeing a little bit of selling off here. Tiny. Microsoft and Meta selling off a little bit. Ten-year yield was acting weak. Early dipped below 4, bounced all the way back up, settling in closer to 4.06. 4.066. Gold was acting strong early. It is closing near the lows, down about 1%. Silver down 2.5%. $6,600 fly still bouncing around. Somewhere between 120 and 170. Try to get filled on a 6,600. Now it's up to 05. Try an 05. Working at 00 and a 05. Got 4 minutes to go. It's trading right at 00. Looks like it's close to $2. Now it's dipping below. I'm going to cancel my 05. Now it's down to 95. Trying to work a 95 for the next minute. Working a 95 and a 00. Two and a half minutes. Two minutes. I'm going to cancel my 00. And I'm going to cancel my 95. I'm out. No Mahomes. No Phil. S&P sitting at 65.96. Does anybody have any premium they're looking for a pin on? Probably quite a ways away from the money if you do, with this little action here in the last hour. You're definitely not getting 315. Got 40 seconds. I would assume the 95s may have just gotten filled. Fifteen seconds. Anybody get filled on the 95? It's back up to 00. There's the bell. 95 would have won if you could have gotten filled, which you might have because it was hanging around there till the last few seconds. All right, looks like the final is 6600.41. FOMC day in the books. Like I mentioned, I'm going to be focused a lot on directional trading tomorrow. Should have some good range. Hope we have some good range. As far as news, Thursday, unemployment claims pre-market, Philly Fed manufacturing index pre-market, and then not much else. All right, all. I'm sure we'll have some tweets about too late, Powell. Not decreasing 50 basis points, but we'll see about that. All right, all. Take care. Have a good night. Cheers.